VP of Finance, and Evgeny Risovich, Investor Relations at Maib. Makar's appointment has been confirmed earlier this week by the National Bank of Moldova, and we congratulate him for assuming full responsibility for finance at Maib. His previous job was with McKinsey in several countries. He also worked for leading European banks before that. So this presentation contains some forward-looking statements which are based on our best estimates, but which do not represent the promise of the future performance, and we cannot give assurance of the accuracy of these statements and the events that will happen. Now, going into a very quick overview, this quarter was an exceptionally good one for Maib, and Georgi and Makar will cover this in detail. But as you can see from some of the key performance indicator, this is a very good quarter for Maib. First, we will cover the macroeconomic overview of Moldova, some of the key events during the period. Firstly, GDP has seen a contraction of 0.9 in the second quarter. Third quarter numbers are not yet available to us, but a range of forecasters such as IMF, EBRD, Moldovan Ministry of the Economy have downgraded their forecasts for Moldovan economy to -1 to +0.3 for 2022. This is, of course, driven by the disrupted supply chains and lack of consumer and investor confidence in the first half of the year, of course, because of Russian invasion of Ukraine. Fiscally, Moldova is expected to end this year with a deficit of 4 to 7% of the GDP, and total debt to GDP to reach up to 38% from 33.5%. This is still very low compared to international peers. Forecasters see a good rebound in the second half of next year in the absence of some unpredictable external shocks. Now, the key economic theme during the past quarter into the fourth quarter, which just began, is very high inflation, which is second highest in Europe. We have seen it exceed 34%. And once again, this morning, the reading was over 34% yet again. The National Bank expects third quarter to be peak inflation in Moldova, and then it should go down to around 22% in the first quarter of 2023, and then normalize in the second half of 2023 and into 2024. Inflation is driven primarily by an increase, a fourfold increase in energy prices, fuel, and also food prices. To combat inflation, the National Bank has decided to wage a very tight economic policy, and we've seen the base rate reach 21.5%, an exceptionally high level for a very long time. And reserve rates, obligatory reserve rates, have reached 45% for local currency and 40% for local currency and 45% for hard currency. And this is a very tight monetary policy indeed. And all this combined, so the inflation rate, lack of consumer confidence, the disrupted supply chains, as well as contraction in lending, this has led to a contraction in the second quarter. Now, going to the performance of the currency, the Moldovan lei, it has been exceptionally stable. We've actually seen it appreciate against the euro, which is the main reference hard currency for Moldova. And we have also seen official foreign currency reserves increase very strongly to the end of third quarter, reaching 4.2 billion USD, up from 3.9 billion USD. This was of course helped by the macro assistance that Moldova continues to receive from a range of donors, including IMF, the EU, and a range of countries. Now, these reserves represent over 6.5 times monthly imports from Moldova, which makes currency very well insulated against any potential shocks in the market. Now, in terms of the banking system, we've seen an asset base expansion of 5.5%. Maib's assets were up by 8%, enabling us to gain market share, primarily thanks to the performance of the SME segment, but more about it later. Maib's deposit portfolio also outperformed the banking system, recording flat numbers since the start of the year, while the system has contracted by 2.3%. Now, speaking about the key political developments that influenced Moldovan economy and Moldova in general, of course, on everyone's mind is the energy crisis. And what has happened is that Moldova, for the first time, has imported energy, primarily gas and electricity, from sources other than Russia. And these are the first steps to energy independence. What's more important is we've seen the real economy of both gas and electricity achieved during the third quarter. It's a national effort, and international partners of Moldova continue to support it on its path. Another important development, which we commented on in the second quarter results, is the law on responsible lending, which has introduced tougher requirements for banks and non-banking lenders. And we have seen the impact of this law in the third quarter very well pronounced, and some pockets of activity have seen substantial slowdown. But in general, this law, we expect it to clean up the banking system, and the responsible lenders will prevail at the end. At this point, I will pass the microphone to Georgi Shagidze, the CEO of Maib, who will give an overview of bank's operating milestones and strategy. Thank you.
Thanks a lot, Evgeny. Maybe we'll speak about the numbers more, and Makar will go through the respective slides. But what we can highlight here is the quarter three has been quite impressive from the perspective of the growth, profitability, and asset quality that we have been creating reserves. And as you can see here, return on equity for the quarter three was about 21.2%. Few key facts about Maib is that we are the largest bank across all the key metrics and key products. Our assets are about 2 billion. Our equity is about 320 million in dollars. If you think about the shareholder structure, as many of you may remember, we have 41% belongs to Hein partners, consisting with EBRD, Horizon Capital, and Invalda, and the rest of the shares belong to about 3,000 individuals, out of which 14 individuals have about 26% of the shares. If we move on to the next page, and this is where we basically summarized our strategy, is that number one, this is again to put the customer at the center of everything we do. I'll speak about it in the next slides, but there are so many things that we are doing under this initiative, including the transformation of our branch network, the rebranding, but most importantly, transformation of the corporate culture, where we again want to put the customer at the center of everything. Next one is to focus on digital and to focus on digital initiatives. We have already significant progress in launching new digital initiatives. We'll show it to the next slide. And then this is to list our shares on Bucharest Stock Exchange, which we are exploring quite actively. If we speak about the more medium to long-term plan, then we have one more initiative to expand our digital services into the region. Next slide basically summarizes our various achievements and awards that we've been receiving, and we are very proud that prestigious awards like the ones from Global Finance or Euromoney, they name us the best bank in the country repeatedly for many years. You can also see the pictures from the flagship event related to our IPO journey that we did in Bucharest on 30th of September this year, and the event was opened by the prime ministers of Romania and Moldova with about 200 plus participants. If we go to the next slide, basically this summarizes our continuous effort to invest in people, continue transformation in Agile. And in this regard, I would like to highlight maybe three areas. Number one is that we this year will finish the transformation for Agile of our retail and SME perimeter. So from 1st January 2023, entire head office of retail and SME will be working in Agile. The second thing which I would like to highlight is that we basically are refreshing our strategy, and within this, in addition of discussing it with the consultants or top-tier consultants, we have had chance to visit the specific operations in the banks that are more advanced in Agile, for example, ING. And the one that makes us particularly proud is the fact that we took 60 people in these workshops. And number three is that we started Stanford Graduate School of Business, the executive education for about 60 of Maib's mid and top management members. Next slide. This is related to various HR branch and premium banking initiatives. You can see the premium banking launch that we did last year. This quarter, and also we continue changing and transforming all our branches into the new model. And new model does not mean only new design or only new colors or the brand. There are many more things that we need to do, but then this is the progress that we have. This slide basically summarizes our achievements in digital front. I think quarter three was quite impressive from the perspective of launching Google Pay, FADA, adding 2 new customers and new transactions in our apps. We are about up to 400,000 mobile banking application users. 44% of deposits are opened through online banking. About 1/3 of our loans are disbursed from online banking, from mobile banking. Next one. Next slide. If we move on to the next slide, Evgeny. These are the initiatives that we have in ecosystems, and there are 3 marketplaces which are today mostly focused on classified services and will evolve to become ecosystem towards their way to the super app that we are launching and we are operating. The first one is about automobiles, the second one is about housing, and the third one we basically started to do is ecosystem related to agro products. And Maib has very strong presence in agro in the country, and now we want to use this and add the services through digital platforms. Yeah, so this is in summary of the section about the developments. I'll be happy to answer the questions, and now Makar, please continue with the numbers.
So I think we can move to the next slide. I hope we have now everyone sees the slides and here as well. So let me quickly indeed now cover the financial part of the story. So as Gurgi mentioned, we had a very good and strong Q3 of the current year, especially if we compare to the same quarter of the last year, where across all dimensions I think we improved significantly our performance. If you look on the net profits, it's like close to 40% up. And now what we see, like we have 322 million just quarterly profits for the last Q3. ROE is again increased by 3.7 percentage points, 21.2%, which is above our 20% the minimum target. And also when we look later on the pre-provision profits, it's even higher. Margins improved on the overall context of the we have high interest rate, we have high reserve, but also remuneration, so it has a positive effect on the net interest margins of the bank. We have paid a very close attention to our operating expenses, and combination of lower growth of operating, tighter management of the expenses, and higher growth of the income. We have improved cost-income ratio by more than 7 percentage points compared to the last the same quarter last year. Capital adequacy ratio, we hit 22%, which is very strong. If you look on the liquidity ratio, it's still lower than the same quarter of the last year, but we will see that it's improved for the second quarter of the current year. So the hit which we took and the whole market took in Q1, we have recovered it in Q3 2022. On the next slide, if we look on the overall loan and deposit evolution, I think we have a very strong momentum on the both, despite the challenges which we face. On the loan side, the main driver was SME, where we continue to support our small, medium enterprise in the economy. It's plus 11% quarter on quarter. If we talk about retail, it's quite flat. So that's as expected, because that's the first area where we see the flattening of the both demand and the supply, and also because of tightening monetary policy, we have increased the interest rate, which makes, of course, the demand from the economy, from the retail customers lower. Corporate has also seen the effect of the tightening monetary policy, and what we see here in Q3 that we have a relatively flat portfolio, slightly decreasing, but also increase the portfolio of the foreign currency loans. Deposits is very strong, and now compare Q3 to Q2. In Q3, we fully recovered the effect which we had in Q1 after the start of the crisis of the war in neighboring country in February 2022. On the next slide, you could see also the net interest income margins effect. So it's increased significantly, and especially given the increase in the interest earning assets as a value, but also the increase in the rate of the interest rate on the asset side. From one side. From another side, we also have higher remuneration of reserves, which have been increasing, and the T-bills, which are in our portfolio. So all these had a positive effect on the net interest margins. While the increase of the cost of deposits and the repo, of course, had, which we see on the next slide, had a slightly negative effect, but still that increase was lower than of the costs. Was lower than increase in the revenues on the asset side. So all in all, we increased the NIM like more than 18%. Now, if we go to the next slide, what you'll see here, we have cost of funding increase. I will start with the right. Cost of funding increasing, but the rate of increasing and also the level of increase still below the yields on the loans and securities, which allowed us to make that positive evolution of net interest margins. And we believe that that's as compared to the expectations. So we are very strong on the net interest margin to over 6 percentage points in the current quarter in Q3. If we move further to non-interest in margins, if you go next. Good. So non-interest income. I think here we had a positive effect across all non-interest type of income. FX increased because only because of the increase of volume, given the higher volatility on the market. Our margins or spread are the same, so it's driven, the FX side driven only by the increase of the volume on the market and what we have bought or sold. If you talk about the fees and commissions, it's driven by both increase in the value of the payments, but also or the cards business, but also the increase of the number of cards in the circulation. So we have both effects. From one side, the volume increased by 30%, but while number of cards increased by 6%. So that strong momentum which we start building at the beginning of the year is we're seeing the effect right now, and we expect the continuation of that strong performance on the non-interest income. If you go to the next slide, you'll see the operating expense. As I mentioned, we paid a very strong attention to our operating expenses. We have some increase in the staff, but that's given by the fact that we moved to the new grading system from one side, and of course try to adjust our remuneration of the workforce as we have higher inflation. But again, that's the effect you see here. While on the OPEX, the third-party expenses we keep under control. As a result of the lower increase of the operating expenses compared to the income, we have significantly improved our cost-to-income ratio to like 40%, which is super strong and super good for us. If you go to the next slide. What we see, we have cost of risk increasing for the 9 months 2022. It's driven by the fact that we took conscious, more prudent approach on the way we look at the forward rates, forward-looking assumptions, so-called, be it on the economy, be it on the quality portfolio, to make sure that we, on the safe side, we cover potential risk which we could face in the future. Still, if we look on the quality of loan portfolio, it's very good, it's very strong, 2.5. And what I want to highlight, the coverage ratio, NPL coverage ratio, even improved just from the policy which we have to ensure that we have all NPLs covered, and you see 187%. So we adjusted our assumptions on the forward-looking what could happen, but at the same time we see strong performance of portfolio, and we try to do our best to have well covered in case of any risk is coming. If you go to the next slide. Now, if you look on the capital side, as I mentioned, the main message is we have now hit the regulatory capital 22% compared to the 18.9 minimum. So we are very strong on the capital side. Capital requirements slightly decreased, driven by increase in the buffer systematic risks, and our own funds increased mainly due to the generation of the difference between BM and IFRS provision. So we are quite comfortable on the capital side, increased our capital position and strongness. And now if we move to the liquidity side, what the key message which I want to highlight here, that even though we, again, given the crisis which we hit at the beginning of the year, compared to the same quarter last year, we are lower, but still we see improvements of the liquidity, and it's mainly driven by the liquidity in the local currency in lei, while liquidity coverage ratio is still over 170%, above 80% minimum requirements from National Bank. All in all, if you move to the last slide, our ROE is very strong and it's improving significantly for the last quarter. Our pre-provision ROE even higher. Again, our conscious policy decision to increase our provisions to make sure that we are well covered. And our pre-provision is even 34+% ROE, while ROE is over 5%. Again, net income is 3.5 at ROE 3.2, which is very strong and significantly better than the last quarter or last year. Thank you.
And now,
thanks, Makar. And this is our medium term. Here we have the medium term targets. I think we can just reiterate that we would like to continue diversification towards the retail and SME segments when it comes to the growth. Our return on equity target for the medium term remains 20% plus. We continue increasing or rapidly increasing our market share in payments, and then we want to add ecosystems, and all this we want to do with very stable and improving customer experience and employee engagement targets. Thank you very much. Now with this, we can invite you to the Q&A.
Okay, we have a question on email, and it's about non-banking lenders and what you see happening with them after the adoption of the responsible lending law.
The responsible lending law adopted for the non-banking lenders from September, as opposed to banking, which was earlier in the summer. So I think it will need some time for non-banking to become in the same framework and not to have this type of regulatory arbitrage. There are, of course, many plus and minuses of any law in this regard that are taken, but overall we see this to be prudent approach, especially onset on the crisis, and in the future we will continue providing our input and insight to the policymakers and NBM.
Thank you. The question on this year's dividend in Q2. Maib said that it will apply for a dividend payment.
We have not yet disclosed the final decision related to dividends. We plan to have the AGM in December, end of the year, and one of the topics of the AGM will be dividend.
Thank you. Can you comment on Maib's IPO plans?
Yes. Firstly, I need to say that IPO remains subject to shareholder approval, and we will go to ask for such approval. That said, we continue improving across many areas, including the investor communication, corporate governance, and preparation for IPO, by the way, which is very important for the bank to get to the next level with or without IPO. We basically do not exclude to do IPO even next year. Of course, that depends on so many things, and many of these things we do not control.
Thank you. Can you briefly comment on Maib's portfolio quality in light of increasing energy prices?
Good question. I think what Makar said in his part of the presentation is that we do go through our book and loans very detail and try to create the provisions to ensure that basically we are ready for the winter, if I may, as well, before situation starts recovering, and this is why we increased the cost of risk and increased our provision levels. In fact, Q3 coverage ratio is even higher than the coverage ratios in Q1, and this is the case across all the segments. So this is not one segment covering the other. And this is the approach we will continue doing, applying during the year.
Okay, these are questions on email. Any more questions on chat, please? Okay, thank you. Seeing there are no questions on chat, let us conclude this presentation. Thank you very much for attending it. This finishes today's presentation. Thank you, panelists.
Thank you very much. We have, again, just to highlight, very strong quarter in terms of the growth, implementation of our strategy, and creating appropriate reserves for any potential reasonable development during the winter. And this is the second call that we started to do as the calls that publicly listed companies are doing. And we look forward to seeing you for the year-end, to discuss year-end number in this format. Thank you.
Thank you. Bye-bye.